Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 12th of February Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go through our usual run through in here, but with a slight twist in here for a Monday, where we look at what I like to call the shape of the week. So we'll take a look at the bigger picture. News and events, fundamental macroeconomic, central bank, geopolitical events that are potentially going to shape the week this coming week. Why do we do that? Even though we're day trading at trade day, if we have potentially a data loaded week that's loaded towards the second half of the week, it'll probably mean then the first half of the week is two things: one, less volatile. So you might see narrower trading ranges. You might see, therefore, less intraday volatility, and also, secondly, you are more likely to see more like a consolidation type theme in the first part of the week rather than more of a trend following theme as the market waits for the events. Okay, and we certainly have like so for today, for example, we have very light data, zero data, very little of note, and then going into tomorrow, we have the US CPI data, super important piece of data given the current climate with inflation continue to be brought under control in anticipation of rate cuts coming from not only the Fed but from the global economy. So central banks in the global economy. So we are looking at a big piece of data tomorrow. So today is likely to be one, less volatile, and two, more likely narrower ranges, and three, then less likely to be an aggressive trending day and more likely to be more of a cautious consolidation day. Okay, so just want to point out as well in here as we go through this look at for recap of last week. Can look at to next week. This is the macro matters that we put out on a weekly basis. You can see this below where you are. If you're watching live now, you've got the three columns of research below where the webinar streams here live. So you have the technical analysis column of the market charters reports that I publish on a daily basis. You have the central column where we put out the macro matters and the weekly recap that goes out at the weekend, the fundamental section, and then you have the third column of live Squawk news from our a Squawk service provider that you can also use in here in the members area. In the trading room here, you can access the live Squawk facility, which is the live audio Squawk. Hopefully you guys are all using that. And then also they give us, we get from them their macroeconomic fundamental commentary, which you can see here. So the US briefing will come to that shortly. Let's go through, though, the weekly rather than go. If you want to go into depth, there's a far more depth in here in the macro matters. Again, this is also posted in the forums. It's in the Discord, should go out in the Discord group today as well. But you can see we're going in a lot more depth in here and talking about the various factors that have influenced the market and what we've got coming up. A summary of that is more in here, the weekly recap and outlook. So we'll just run through what happened last week and what we've got coming up this week. So last week, obviously, we stayed in this risk-on environment. Stocks went to new. US stock averages went to new all-time highs yet again. Global stock averages doing well as well. The MSCI World Index in here, so it's the index of world stocks of developed nations in here. It's all-time high, breaking the high from 2022. So that's all very positive. The S&P obviously took out and closed above the psychological 5,000 barrier. Jerome Powell, this is all over a week ago now, but also we had other comments coming from other central bankers from the Fed in here throughout the week. But last Sunday, so just over a week ago, Jerome Powell pushed back on early rate cuts in here, and we also had various other Fed speakers doing the same. The market has been adjusting in here over the last couple of weeks since we've been in February, really, since late January, early February, to not now expecting a rate cut, the first rate cut to come in March, and now expecting the first rate cut to not come till May. And we've been monitoring that on the CME tool. So if we look at the Fed rate cut expectations now for March, they are 85% unchanged in March. Okay, this was a lot different in here after the Fed meeting back in December, when there was a real anticipation that we'd get a rate cut in March. And we can go and look at the historic in here. If I look at the historical, remember what was the anticipation for the 500, 525 to have a rate cut in March? We're going to go historical, and then we click through in here, 500 to 525. We'll get rid of all of these. There should definitely be a tick box to untick all of these. But 500 to 525. And if we look here, you can see how it's collapsed here since the beginning of the year. So the anticipation at the end of last year, 75, nearly 80% chance up here. We were 75%, over 75% chance of us cutting rates for there being a rate cut. And now we're down in here at less than a 20% chance of a rate cut now coming at the March meeting. Okay, if we go back to the current in here now, we're looking for more likely the May meeting now. 56 plus, you got 35% chance of rates staying unchanged. So basically a 65% chance now of the first rate cut coming in May. So we've had that pushback in here from Fed speakers in here. That's been the tail of the tape in here for the last couple of weeks. Increased solvency risk. So this is like kind of something that's bubbling under the surface. It's not really had a significant impact on the major indices. Obviously, it was 2 years ago, it was in 2022 that we had the US regional bank concerns, and we've got those coming back in here. Solvency risk for small regional banks due to the falling commercial property values in here, and we are seeing some concerns around that. However, it's not there's not been a massive contagion, hasn't hit any major banks, any of the larger banks, and we haven't seen it impact internationally, which it did. There was a whole thing where it kind of became contagion within not only within the US, and concerns from the major central banks who then all got involved back in 2022. We're nowhere near what was happening back then, but there are some concerns about that, and I think it's something we need to keep an eye on as we go forward. We also had a Treasury auction last week, largest ever 10-year note auction, also a large 30-year note auction, $42 billion worth of 10-year notes. They came in at just under 4.10% here, slightly anticipated, signaling robust demand for investors. So despite it being a large auction, the auction went relatively well, and that's kept pretty much bonds in here have been in a more of a sideways theme, despite the fact that the Fed have pushed back on the rate cut expectations in here. So we're remaining in here within a range environment in here at the moment. Whilst I mentioned that, it just does remind me, I just need to say we'll put these out once the recordings go out, but I'm on doing a couple of TV interviews today. I don't think we're going to get the links for you to see them live. We might be able to, but if I can, we'll get them posted out probably on Discord. But I'm on Bloomberg TV, Canadian Bloomberg TV, later on in the next couple of hours, in 2 hours' time, on their morning show, and then on Real Vision TV, that's correct, right? Yeah, Real Vision TV later today, being interviewed on my views, technical and macroeconomic views on financial markets. So we'll post those out once they have gone. If we can get the links beforehand, so you can watch live. If not, once that we'll get the recording, so you guys can watch those if you want. Right, moving ahead. So we know obviously global stock indices and the US indices did well. They were higher. Yields in both US and Europe kind of sideways in here, but edging slightly to higher yields. US dollar index remains kind of positive. So the US dollar stays strong, consolidating gains that we saw earlier in February. Gold futures was in consolidation, but at the lower end of an intermediate range in here. So dollar strength often leads to gold weakness. So we're kind of seeing that, a little bit of dollar strength within the range at the upper end of recent ranges, and gold at the bottom end of recent ranges. And oil futures sold off 2 weeks ago, rebounded last week, and kind of has a neutral outlook. Let's look ahead to this week now. What do we have coming up? So Chinese New Year this week. So it kind of kicked off last Friday, the Lunar New Year. It's not only China, but also in other Asian markets are going to be closed for most, if not all, of this week. So a lot of Asia is out. So Asian sessions they're always relatively quiet in here compared to the European and US sessions, but looking for the Asian sessions to be even quieter potentially this week. So that's something to bear in mind as well. And if you're looking at volatility, if you're looking at trading pre-markets or post-markets in here, when the US cash market is closed, or when the European cash markets are closed, bear in mind that the Asian session could be even quieter and less volatile than it usually is. On the central bank side, it's very, very, very quiet. We don't have any of the key big major central banks in play at all this week. But as ever, we're going to watch out for Fed speakers. They are always in focus. And we're going to be keeping out from any comments on the Fed from the Fed. It's a relatively busy week. We have on the data side, we have nothing really of note in here today. But going into tomorrow, the big data is really tomorrow when we get the US CPI data. We also have a host of European data coming out this week as well. But the big two pieces of data from the US are the US CPI tomorrow. Now, remember, that is one of our economic events at trade day that you can't trade over those economic news 2 minutes before or 2 minutes after. No holding positions 2 minutes before or 2 minutes after the data, the US CPI data coming up tomorrow on Tuesday. I'll remind you again of that tomorrow. There are notes already out on the forum, gone into Discord. You get the alerts on Discord, etc., etc. Email has been sent out as well. And then the other big piece of US news is we have US retail sales coming out. And US industrial production, but really the focus on the US retail sales. That comes out on Thursday. So Tuesday and Thursday are the big two data points from the US. But elsewhere, we do keep an eye on all this other data we have coming out as well. So we've got in the UK, we got the employment report coming tomorrow, and also the inflation report the same day as the CPI data. On the Wednesday. We have German ZEW surveys tomorrow, EU GDP on Wednesday, also employment and industrial production, Japanese GDP, Australian employment report, UK GDP, industrial production, manufacturing production on Thursday, and then UK retail sales, and then we get US PPI and US Michigan consumer sentiment data on Friday. So it's kind of a busy week for big headline data, employment data in there, inflation data, GDP data out of Europe, but the real big ones we're going to be monitoring really, US CPI on Tuesday is the real standout. It's the most important piece of data really at the moment we get. Probably trumps the US employment report in here at the moment. And then we get US retail sales on Thursday. Okay, you notice now we don't have the earnings calendar in there. I'll talk a little bit about that very quickly. So here's the earnings calendar. Most of the big earnings are behind us. I'm not going to focus on this going into this week. You can see some of these names in here, much smaller companies reporting. Coca-Cola's reporting, but doesn't usually have a big impact on the indices. That's what we're looking at. Is it going to affect the major averages? And none of these are going to really do that. We will return to this, though, not this week, but next week, I think. I think it's next week. If I go into next week. Yes, from next week. So you look next week, at the beginning of next week, Tuesday. These are the ones that then can have an impact again. Walmart and Home Depot. Obviously, these are rough, and then we've got Nvidia as well the week after. So we will return to these at the beginning of next week. So those are the big ones there. Walmart and Home Depot, a big reflection, echoing the US consumer. So they're super important. And obviously, Nvidia, a massive stock these days, nearly a $2 trillion stock, and obviously looking at how the chip industry and the obviously its links to AI is going. So those are two that we're going to, or three companies we're going to be returning to, not this week coming, but the week after that. So we're going to be keeping an eye on those. Just going back to the calendar for today, we've already kind of covered it in here, but you can see in here nothing of real note in here. We do have a Japanese holiday as well overnight last night. There's the Chinese New Year. Also, it's Korea as well, close, so South Korea and China closed in here for the Lunar New Year. And you can see they're very, very light on here on the data side, but we do have Fed speakers. Going to be watching out for these as we go through the week. Bowman speaking at 9:20 Eastern time, and Kashkari speaking at 1 o'clock Eastern time. So keep an eye on those as we go into this week. Headlines from Live Scoop. You see there's nothing really massively significant in here. Slower US inflation. That's looking ahead to tomorrow's data. ECB, when are they going to start to maybe look at their rate cuts? But nothing in here. UK. This is all looking forward. UK employment rate. These are all looking forward to data we've got coming up this week. Obviously, it's Monday morning and it's slow news. Nothing really happened so far today or over the weekend. What else have I got for you? So 5 things to start your day in here. The Americas. So traders came to Fed. Bond traders finally heating on the market. So we already know this. Don't fight the Fed. Okay, the Fed are basically telling us that they're going to only cut rates 3 times, maybe 4 times this year. And the bond market was pricing in 6 rate cuts. Now it's pricing in 4 or maybe 5 quarter-point rate cuts in here. So the market is starting to listen to what the Fed. And so we had the move. What I think is really important in here is the market has shifted that way, okay? And stock indices have taken it in their stride. That's really important here. So we've seen basically the market got ahead of itself after the December Fed meeting was very, very, very optimistic on rate cuts. The Fed have pushed back on that. The market is and this is all the bond and interest rate markets. The bond and interest rate markets have listened. We did get a little bit of a wobble on the stock indices at the first part of the year, but generally for most of this year, the stocks have been up anyway. Okay, so despite the Fed pushing back against interest rate cuts, and now the bond and the bond, or how aggressive the interest rate cuts are going to be, and the bond market listening to that, we have seen a slight dislocation. We've spoken about this in the past, and we can jump to the markets here. So we had this very strong correlation throughout Q4 of bond prices going up. You can see in here, up from October to the highs at the end of last year. So this was bond prices going up in price, so lower yields, as there was more and more anticipation that the Fed were going to start to cut rates. And since then, the bond markets have been choppy and sideways in a range, and now at the bottom end of that range. So it's low prices, higher yields. So an anticipation that yields are actually going to be higher. Okay, but in the midst of all that, we had this strong correlation through much of last year, so October through to the end of last year. And then when the market went on pause for the first part of January, when we were like wobbling on the stock, on the bonds, the Fed pushed back. And then since the Fed pushback and the bond markets reacted, stocks have gone higher. Okay, so stocks are completely rejected, or not rejected, sorry, accepted the fact that yes, the bond market has reacted to the Fed pushing back, and the stock indices don't care, and they've gone higher and higher. So obviously these charts are looking super bullish in here at the moment, still pointing higher. So that's one thing there. Economist criticisms, markets will be relatively more in line with the Fed's speaking economists are critical of the current stance. So none of this in here. What we've got, flurry of Fed speakers, we've spoken about that already. We've got those coming this week. 8 official making appearances. Bowman, Barkin, Kashkari kick off things on Monday. We've already looked at that. And we've got the CPI data coming up and markets being steady. So there's nothing massively significant in there that we don't know already on 5 Things Society Day. European stocks a little higher in here this morning on the coattails of the S&P, pushing above 5%. Annual CPI below 3% seen for the first time. So this is like the anticipation of what we've got coming up. Futures subdued overnight and this morning and overnight so far in early trade, pre-market trade. Caution ahead of a data-packed week, pointing obviously to that European data, but most importantly that US CPI data. Bond traders cave, so we've already spoken about that. Markets now shifting from where they were, as from a wide gulf remained between the two as recently December. So Fed expectations on what the derivative market showed, we've seen that kind of narrow in. So remember, we just said that, right? The Fed were telling us 3 rate cuts. The market was pricing it up to 6 rate cuts this year. Now we've seen the Fed maintain its 3 rate cuts, and then the market has kind of caved in, moved back the other way. So that's important, given that equities are still going higher. US inflation looms large with Asia and holiday. We've already discussed that. We've looked at the Fed tool. Quick nod to the overnight. Obviously, Asia closed in here. Well, not Asia, sorry. China closed in here, so not so significant what the Hang Seng did. In Nikkei, with Japan closed as well, actually, pretty much unchanged in here this morning. European stock indices slightly better, but not much in it. UK FTSE actually slightly down, just over 1/10. German DAX up 1/3, and the French CAC up 1/3%. And on the overnights on the US, why is that not expanding out? I did that before we come on. So here we are. Where is it? Eventually, we're pretty much unchanged in here on the overnights. Okay, so you can see in here Dow, S&P, and Nasdaq pretty much unchanged. So not much to say on that. And we've already looked at this already, but bonds in here pushing back up towards and hovering at these more recent. So this is high yields. This is the yield chart. Remember, this looks basically the upside down chart of the price chart. So bond yields staying at these more. This is the 10-year yield chart. Bond yields staying up towards recent highs. They break up through 420. That could be a little bit damaging for stocks, but at the moment we're actually retreating back to lower yields in here this morning. And there's the bond chart in here. So say hovering down the 119.00, the important level here. On the 30-year, 10-year, you can see it's already broken down on the price down below more recent price lows. And indices stay firm. I'm not going to run through all the charts in here. Bond, stock indices are at the highs, closed up near the highs, and stay bullish as we go into today, kind of unchanged, hovering at recent highs. So for me, we've got a bullish stance going into today, but don't expect too many fireworks ahead of what we've got as a really important day tomorrow with the US CPI data. However, we do have those Fed speakers, so watching out for the Fed speakers. They could allow a bit of market movement ahead of the US CPI report tomorrow. All right, guys, any questions, you need to pop them in real quick because I'm going to wrap up. If there are no questions, I'm going to end there. I'm going to wish you all a great trading day. Take care, stay safe. I'll be back with you for another bull versus bear webinar tomorrow ahead of the all-important US CPI report. And remember, no trading of that report, but I'll remind you of that tomorrow. All right, guys, have a good one. Take care, stay safe.